Hello, everybody, and welcome to IMPLAN's International 2020 Data Release webinar. IMPLAN's updated international product opens up a world of possibilities for global input-output analyses. With the addition of 10 new countries to our database with the 2020 data release, our international product now covers a total of 76 countries, empowering users with broader insights and deeper understanding across diverse economies. For those of you who don't know me, I'm Michael Nealy. I'm a Senior Education Services Specialist working on the Education Services team here at IMPLAN. And joining me today is Ashley Bickel, IMPLAN's International Data Specialist and Support Economist on our data team. She'll be leading us through the bulk of our conversation here today. But before we get started, just a couple of housekeeping items. Remember, if this is your first webinar, that we do try to keep our webinars as interactive as possible by allowing attendees to pose questions live to us as we go through the content. However, today's presentation will likely take close to the full time, so we ask that if you do have a question related to today's topic, please utilize the question box and go to webinar to pose those. Our team will do our best to monitor the question box throughout the presentation, and at the conclusion of the presentation, we will answer as many questions from the audience as time allows. If you do not get an answer to your question within the time frame we've allotted for today's webinar, we will personally follow up with you at its conclusion. Okay, so jumping right in, what will we talk about today? We'll start with a brief overview of IMPLAN, then talk about at a high level IMPLAN's international product, highlight some interesting things about our international 2020 data release, talk about some noteworthy differences from the core US products and the international data products, and then jump into an example MRIO analysis utilizing the 2020 data release. Okay, so I'll start by speaking briefly about IMPLAN at a high level before passing the mic off to Ashley. So IMPLAN's input-output model from a data and software perspective includes models of national and regional economies. This includes economic interactions between industries, households, and governments, as well as trade relationships, both foreign and domestic. IMPLAN can be used to show the wider economic impacts of a change to the economy or the wider economic contributions of an existing industry or activity. This includes indirect impacts from supply chain purchases, as well as induced impacts from household spending of wages. Thinking generally about an input-output modeling system, this is a complete picture of the monetary flows that occur in an economy within a given year. This includes industries, perspectives, so the value of production, input purchases, profits, any inventory, taxes, labor income, or employment and subsidies, again, from an industry's perspective. From a household's perspective, IMPLAN and IO models in general provide spending patterns of household spending distribution, the income that household earns, taxes that are paid by households, any social assistance that they receive, and any savings that they're able to allocate within a given year. From a government's perspective, an IO model includes their consumption, so how governments spend fiscal revenue, investment spending, and again, how they generate revenue, so taxes. And from a geographic level, input-output modeling systems also include trade between various geographies, as well as commuting across geographic boundaries. Thinking first about IMPLAN's US data, we have several different region types that can be found within our US data products. So we have zip codes, congressional districts, counties, metropolitan statistical areas or MSAs, states, and the US total, as well as territories, all of which can be found from our map view, list view, or the search bar within IMPLAN when you're working with that US data. In addition to IMPLAN's US data sets from an economic perspective, we also have various different satellite accounts. So this includes our occupational data suite, so occupational employment, wages, skills, education, and on-the-job training. We also have environmental data, which consists of 12 broad categories of ratios representing physical emissions or inputs per dollar of industry output. We've recently released an expanded demographic data set that includes age, education, race, home ownership, and housing costs, as well as various additional demographic data points. And last but certainly not least, MPLAN also provides time series data going all the way back to 2001. In addition to our US and international based data products, MPLAN also has a Canadian provincial product. This includes 10 provinces and territories that each have 235 industries at a sectoring granular level. The Canadian provincial product also has interprovincial trade, which enables multi-regional input-output analysis. And note that this is released annually, with the most current Canadian provincial data being 2020 and the next being 2021. Okay, so with that, I'll go ahead and pass the control off to Ashley, and she'll jump us into MPLAN's international data. Take it away, Ashley.
Thanks, Michael. So before getting into the details of the 2020 release, I want to take a moment to provide a high-level overview of our international product. So the international product contains national input-output models for more than 50 different countries, with each harmonized industry detail. We release data about every 2 to 3 years as data becomes available from our raw data source, the OECD input-output tables. Country coverage, industry coverage, and the features vary from release to release depending on the availability of data at the time of data production. So the 2015 release covers 64 countries and 37 industries. The 2018 release covers 66 countries and 46 industries. And the new 2020 release covers 76 countries and 46 industries. So in addition to the OECD IO tables, MPLAN gathers data from many other raw data sources to add employment and industry detail for all covered countries and industries. The timing, release, geographic coverage, and industry coverage are driven by our primary raw data source, the OECD input-output tables, which I'll describe here. The OECD input-output tables form the backbone of the international product. It provides distinct input-output matrices for each country. It also provides industry output, industry value added, and final demand for each industry by institution. New editions of data are released from the OECD every 2 to 3 years, with each edition containing national IO tables for multiple years. There is, of course, a lag in data availability, such that the most recent edition released from the OECD, the 2023 edition, contains data up to 2020. It's historically been MPLAN's practice to produce and release data for the most recent year only. So we have releases for 2015, 2018, and 2020. But this year we've decided to produce multiple years from the most recent OECD release. So access to the 2020 data is currently available in the MPLAN application, and the 2019 will be available shortly. This is being done on a trial basis and is something that we would love your feedback on. If time series data is of interest to you in the international product, please let us know by emailing feedback@implan.com. As mentioned previously, we then gather data from other raw data sources to add employment and tax detail. I'll talk more about these in later slides, but they include the OECD Trade and Employment Database, the International Labor Organization's Modeled and Projected Estimates Employment Database, and others. So without further ado, let's talk about the 2020 release. So the international product now has data for 76 countries, up from 66 countries in the last release. New countries include Bangladesh, Belarus, Cameroon, Côte d'Ivoire, Egypt, Jordan, Nigeria, Pakistan, Senegal, and Ukraine. Altogether, these countries account for more than 90% of the world's GDP. Note that the country coverage includes all OECD member countries, all countries within the European Union, and all economies represented in the G20. Other economic unions that might be of interest to users include the countries associated with the North American Free Trade Agreement, the Association of Southeast Asian Nations, and the Asia-Pacific Economic Cooperation, which includes all member countries except Papua New Guinea. As well as the 76 countries covered explicitly by the international product, there is also an aggregate representing the economies of the rest of the world, which we call global remainder. We'll talk more about this in later slides. In terms of industry coverage, the 2020 release has 46 industries, the same as the 2018 release. This includes 45 unique industries and one additional industry to account for taxes on products net of subsidies, or TOPS. This is a unique feature to our international and Canada provincial products. And we'll talk more about that in future slides as well. For every country, we have output, value added, and employment by industry for all 45 industries, allowing for country-to-country comparison. Industries are classified according to the 4th revision of the International Standard Industrial Classification Index. You can find the full list of covered industries, as well as bridges to other classification schemes on our support site at support.implan.com. A new feature that I'm very excited to announce is the ability to conduct a multi-regional input-output analysis, or an MRIO analysis. Starting with this 2020 release, we are now incorporating the OECD inter-country input-output tables, which provide country-to-country trade flows by commodity and trading partner. With this data incorporated, it is now possible to track how an impact in one country affects the production of all industries in any other country. MRIO analysis expands the backward supply linkages beyond the boundaries of a single region. By incorporating inter-country commodity trade data, an analyst can now quantify the demand changes across many countries that stem from a change in production or a change in income in another country. This powerful analytical method allows analysts to go beyond a single study region, measuring the economic interdependence of countries. As mentioned previously, our country-to-country trade data come from the OECD's Inter-Country Input-Output Tables, or ICIO. The ICIO is a globally balanced input-output table that maps the flow of production, consumption, and investment within countries, essentially the national IO tables, and international trade of goods and services between countries. So, in fact, the OECD national IO tables are derived from this larger ICIO table, with the national IO tables on the diagonal and the country-to-country trade flows on the off-diagonal. We utilize this inter-country commodity trade flow data from the ICIO tables to enable MRIO. An important feature of the ICIO tables is that trade flows are globally balanced, meaning that total exports are equal to total imports at the global level. This means that the OECD uses trade data from more than just the countries it covers in its IO database. In fact, the underlying OECD model covers a total of 198 economies. So in the ICIO data, countries that are not explicitly covered in the IO tables, the 76 countries that are covered in the IMPLAN International product, are accounted for in the rest of world aggregate. We have used the data in that aggregate to develop a region that we're calling the Global Remainder region. The Global Remainder region is an aggregate of the remaining economies, which includes 121 countries and a balancer for the rest of the world. It accounts for economic activity in all other economies that are not explicitly covered by the OECD databases and explicitly by the international product. We developed this region to allow a user to conduct a fully global MRIO analysis. A user can include the global remainder region among other 76 countries in an MRIO analysis to capture the global impacts from events analyzed in any or all of the other 76 countries. Given this data generating process, the global remainder region is designed to be solely used for a global MRIO analysis. In other words, it aims to provide a fuller accounting of the indirect effects in other regions that the OECD does not explicitly cover. For this region, it should never be the principal study region and should only be included in an MRIO analysis with all other 76 countries. I want to take a quick moment to clarify a few things about the MRIO functionality in the international product. First, IMPLAN only allows MRIO linking between other countries within the international product, not to our core US-based products. Second, MRIO has only been enabled for the 2020 release, so previous IMPLAN International releases do not have this functionality. Finally, users that are familiar with MRIO in our core US-based products know that commuting is accounted for in these types of analyses. In the US data, commuting flows are incorporated to ensure that household demand takes place at the location of the household, the place of the residence, rather than their place of employment. It also accounts for commuting in that payroll taxes are paid in the place of employment, while personal income taxes are paid in the place of residence. However, due to data limitations, commuting flows are not incorporated into the MRIO analysis in the international product. A couple other noteworthy changes in the international release for 2020 include a new data source for employment and improved tax data. Most countries' employment data now comes from the OECD Trade and Employment Database. This database contains the same sectoral detail as the OECD IO data, and it's also the data source for IMPLAN's employee compensation values. So this results in a more consistent employment by industry estimates. In cases where trade and employment data is unavailable, data come primarily from the International Labor Organization's modeled and projected estimates. This dataset is developed by the International Labor Organization and provides a complete set of internationally comparable labor statistics. However, it provides employment by industry at a more aggregated level than our 46 industries. Therefore, we use data from the International Labor Organization's Labor First survey and OECD employment compensation data, both of which have greater industry detail, to split the more aggregated employment data. The 2020 release also incorporates improved tax data, using data from the OECD Global Revenue Statistics Database, the World Bank's World Development Indicators Database, or data from national statistics offices. Our first choice is the OECD Global Revenue Statistics Database, which provides globally comparable tax revenue data and reports personal income taxes, corporate taxes, and contributions to Social Security in both US dollars and in the national currency. In cases where data is unavailable from the OECD, IMPLAN uses less detailed tax data from the World Bank. The World Bank database provides taxes as a percentage of GDP for only a few tax categories. We estimate taxes based on current GDP and further estimate taxes for more detailed tax categories using global average splits. Finally, there are a few countries that are neither covered by OECD nor World Bank data, and in those cases, we obtain data from national statistics agencies. More information about the data sources for international product will be available on our support site. So for those of you that are familiar with IMPLAN's core US-based products, there are some noteworthy differences that are important to be aware of. The first relates to the industries and the commodities they produce. Like the US data, commodities are numbered in accordance with the primary industry that produces them, with the commodity number equal to the industry number plus 3,000. So for example, industry 5 produces commodity 3005. However, unlike the US data, where an industry can produce more than one commodity, the international product only allows each industry to make its primary commodity. The second difference between the US-based products and the international product is the type of valuation used. In the international product, industry production is presented in basic prices instead of producers' prices. This results in some differences in how taxes and subsidies are accounted for. Basic prices reflect the total amount retained by the producer as a result of a sale. So when valued in basic prices, the value of the sale does not include taxes like sales taxes, but it does include subsidies. In contrast, producers' prices reflect the total amount received by the producer as the result of a sale. So when valued in producers' prices, the value of the sale includes taxes collected as part of that sale that are later remitted by the producer to the government. It also does not include subsidies. As we'll talk about more later, this treatment of taxes and subsidies results in differences in how an industry's value added is reported. One other difference between the producer's price framework and basic price framework is that basic prices distinguish between taxes that are incurred directly related to production and sales and taxes that are incurred not related to production or sales. So on the one hand, we have taxes on products net of subsidies, otherwise known as TOPS. TOPS reflects taxes paid to the government when a good or a service is sold. This typically includes sales taxes, excise taxes on fuel, alcohol, tobacco, and utilities, and import duties, among others. TOPS are taxes that are linked to a unit of output. So if nothing is sold, no taxes accrue. Because it is linked to a unit of output, they are paid out of an industry's intermediate inputs. On the other hand, other taxes on production net of subsidies reflect taxes that producers pay to the government that are not directly related to product sales. These types of taxes generally include land or property taxes, government licensing fees, and taxes on assets or labor employed. Since these taxes are not payable per unit of output, they cannot be deducted from the price, and therefore they're recorded as payable out of the producer's value added. This differs from the US-based products that report these two together as taxes on production and imports, or TOPI. This is a value that is also net of subsidies. The implications of these differences are twofold. The first is that we have a slightly different accounting of value added in the international product. And the second is that we have a sector in the international product that is used for accounting purposes only. So in regard to value added, whereas the core US-based products have all TOPI as part of an industry value added, in the international product, only the OTXS portion is included as part of that industry's value added. The remainder is paid to the TOPS account, which is paid as part of the industry's intermediate inputs. We'll talk a little bit more about the TOPS account in the next slide. Another difference in value added arises from lack of data on proprietor income and proprietor employment in the international product. In the core US-based product, US reports proprietor income separately, which allows for estimates of proprietor employment and other property income, where other property income is gross operating surplus minus proprietor income. In the international product, proprietor income is not reported separately. Instead, proprietor income and other property income are reported together as gross operating surplus. Gross operating surplus, again, includes the consumption of fixed capital, proprietor's income, corporate profits, and business. As there is no way to separate proprietor income from gross operating surplus, it is not treated as part of labor income in the international product and will not generate any induced effect. There are no differences between the international product and US-based products for employee compensation. Because of these differences in value added, it's not appropriate to compare industry value added from the international product to any of our core US-based products. But the US is covered in the international product, and that would be comparable with other countries. Some of you may now be wondering, well, where do TOPS, or the taxes on products net of subsidies, get accounted for? In the international product, TOPS is accounted for in a holding sector that is used for accounting purposes only. What this looks like in practice is that the TOPS is included in the paying industry's production function in their intermediate inputs. Payments are made from the industry to the TOPS row. The TOPS holding sector then pays all of the collected TOPS to the government. The TOPS industry, in this case industry 46, is used for accounting purposes only and should not be used to model impacts. One final difference between the international product and the US-based product is related to the accounting of final demand. Households are a major component of final demand, purchasing goods and service for personal use and generating induced effects in an economic impact analysis. In IMPLAN's core US products, personal consumption expenditures, or the goods and services purchased household by household, include purchases made by an institution known as nonprofit institutions primarily serving households, or NIPIsh. NIPIsh are organizations that provide services to households either at free or economically non-significant prices. So any expenditures made by NIPIShes in service to or on behalf of households are accounted for in the spending pattern of households themselves. This contrasts with the international product, where NIPIsh has its own spending pattern and is not combined with households. In the international product, spending by NIPIsh generates induced effects just as household spending patterns do. One additional difference is that the US data has distinct spending patterns for 9 different household groups, which are grouped by household income. However, due to data limitations, the international product only has one household group, which represents all personal consumption expenditures. I will now pass it back to Michael, who will guide us through an analysis in the IMPLAN application.
Thank you so much for that, Ashley. So now, again, we'll jump into IMPLAN for a quick example of how, one, we can access the international data product within IMPLAN, and two, how we could set up an MRIO and a use case for a international MRIO. So the example we're going to be using today is for a multinational online electronics retailer that is headquartered in the US, but has manufacturing facilities, warehouses, and distribution centers across 3 different countries. To model the 2022 operations of this retailer, we can set up an inter-country project in IMPLAN using the MRIO functionality to assess the economic effects. let's say that we have detailed information on employment and the level of production taking place in each country that the retailer operates. So this is what we know about the location of their operations. Again, we know their headquarters is in the United States, but they have manufacturing facilities in Mexico and China, as well as warehouses in the US and China. Additionally, there are distribution centers for their products in the United States as well as China. So we're going to need 3 separate regions here. And this is the information that we have about their actual operations. So again, we have our headquarters in the US with $25 million of output and 100 employees, our 2 manufacturing centers in Mexico and China, our warehouses in the US and China, and our fulfillment centers, again, in the US and China with varying levels of production and employment. So we can model each of these as individual events in IMPLAN and allocate them to the regions that we know this production is happening and link them together utilizing the MRIO functionality in IMPLAN. So like I said, in order to see the impacts across the 3 countries where the company operates, we're going to need to include 3 regions in our project. 1, we'll need the US for the headquarters and those warehouse and distribution centers. We'll need to include Mexico because we know there's a manufacturing facility there. And then we have a manufacturing facility, a warehouse, and a distribution center in the People's Republic of China. So now we can go ahead and jump into IMPLAN. So I'll start first at the IMPLAN dashboard. Whenever you log into IMPLAN, this is what you will see. In order to get started utilizing the IMPLAN International product for an IMPLAN project, you will need to start first by selecting that industry scheme. We can do this by clicking New Project in any location throughout the IMPLAN application. From the IMPLAN dashboard, we can hit this blue plus icon, which will give us the following pop-up. We'll start by entering a name. Specify the folder where we want it to live, and the important one here is our industry set. Unless you've specified otherwise in your user preferences, this should default to the 546 industry scheme, which is used in the US core data product. We can click the drop down here and see that we have 2 different options for international. The 2015 international data utilizes the 37 industry set, whereas the 2020 and 2018 international product utilizes the 46 industry set. So if we click 46 industries here and create our project, this will navigate us to the regions page where we can find all of those available countries. If we want to zoom in, simply double click the left click on your mouse, and we can scroll around the globe by dragging our cursor as such. So we can see all of those countries that are available. If we'd like to zoom out, we would right click. Whoops. Doesn't seem to be working right now, but that's okay. We could always just scroll around. So if we wanted to select France, for example, we would just left click on France, and then we could use this in our project. For our example here today, in the name of saving a little bit of time, I went ahead and set this up in IMPLAN and ran it. So we selected our 3 regions, which you can see on the right. We have the US, Mexico, and the People's Republic of China, each of which is utilizing the newest 2020 data year so that we can use the MRIO functionality. And we've set our dollar year to 2022 because that is the year of operations that we're modeling. Over on the left-hand side of the screen, we have events for each of those facilities that I spoke of. So we have our US headquarters, our manufacturing center in Mexico, our manufacturing center in China, our warehouses in the US and China, and our fulfillment centers in the US and China. Each of these events is set up utilizing an industry impact analysis detail, so we can specify our output and our employment levels. And we also have event tags added to each of these. Event tags are a feature in IMPLAN that allow you to segment your events by the type of activity that you're modeling. For instance, this event here is the fulfillment center in the US. So we have two different event tags, one that will indicate that we're using the US region for this event, and the second is to indicate that this is a fulfillment center that we're operating. Utilizing event tags gives us the ability to segment our results both on the impacts page as well as the results page. Remember that in order to render this in MRIO analysis, you simply need to include more than one group that is not overlapping with the other group and click the MRIO checkbox before you run. If we jump into the results here, the summary overview page will give us the sum across all of the events we ran. So this is the sum of the economic effects of online retailers 2022 operations in all three countries. If we want to segment our results, we can utilize the filter options up at the top of the screen. For instance, if we just want to see the effects in the US, we can filter by region, United States, and update our results. Because we haven't added an event or an event tag filter, this will be the sum of the effects for all of the events, whether they took place in the US or not. For instance, we can filter on our event tags and see the effects of the manufacturing facility in Mexico on the US. So if we update this here, we'll get some indirect and induced effects, and those are those interregional spillover effects that we would not have been capturing had we not set up an inter-country MRIO project. So over $10 million of total output from the indirect and induced lines alone, just from that one event. We also added event tags for the type of facility. So for instance here, we can filter by just our manufacturing and get those two events that we had for Mexico and China and see that in the US that there's a sizable portion of our economic effects that would have been lost to leakages had we not set up in multi-regional input-output analyses in this way. Okay, so that's how you could access the international data in IMPLAN's application and how you could set up and utilize as well as filter an MRIO project. Jumping back into our slides here real quick as we wrap up. Remember that if you do have a question, I know we've had a couple of them come throughout the presentation, please post them in the question box. Even if we don't have time during the presentation itself to answer them, we will follow up with you personally after we finish today. If you want to dig a little bit deeper into the application, if you've seen something today that interests you and you want to schedule a demo, live personal demo, you can do that by visiting implan.com/demo. On a demo, our team can show you all of the data inside the application, run through an analysis specific to your interest, or show you all of the results populated by IMPLAN. Again, to schedule yours, visit implan.com/demo. You can always additionally email our customer success team at support@implan.com with a more specific question. Additionally, you can always post a question or discussion topic in our community forum located on support.implan.com. Support.implan.com is always going to be your 24/7 support resource. You can find recordings of past sessions along with registration for upcoming webinars under our Learning Center. And again, the support site has tons of helpful information about IMPLAN in general, as well as international data.
Michael, it looks like there are a couple of questions coming in. One of them asks, does the economic model for Mexico include the states in Mexico? So a user could build an economic model for a region that includes 5 states. Unfortunately, the international product is a national model only. So we do not have subnational data for any of the countries included in the international product.
Yes, great point. And it looked like a couple of people had asked that question, Ashley. Another one that came in is asking about what the impact would be of not capturing the inter-country leakages. And that's a great question. If I jump back into the application real quick, remember here, seeing these indirect and induced effects, right, from these manufacturing facilities on the US. Well, these manufacturing facilities are located in Mexico and the People's Republic of China. So these values we see here, the employment, labor, income, value added, and output, would not have been captured. In this instance, it's over $12 million worth of output alone, over $7.1 million of value added, and nearly 50 employees. All of that would have been lost to leakages had we not linked Mexico and the People's Republic of China to the US regional model in this project.
It looks like this question has been answered, but I do want to elaborate on it. So it says global remainder sounds like a great addition to an MRIO analysis. Is that included when we only have one international country? And the answer to that is the global remainder is only included with access to all international countries. And the reason for that is that the global remainder is not the remainder of the rest of the world from the one country that you have. It's a fixed amount of countries, 121 countries that are not covered by the international product. So the global remainder region can only be included when all other 76 countries have been included in an MRIO analysis.
Okay, well, that looks like on my end, that's all of the questions we have so far. We can hang out for another minute or so and see if any additional ones come through. All right, looks like we're not getting too much. So I'd just like to thank everybody again for joining us here today. I'd like to thank Ashley for leading us through this very insightful presentation on IMPLAN's international data and the 2020 International Data Release. Remember that you can always find more info at our support site, support.implan.com, and you can inquire about IMPLAN training courses at implan.com/IMPLAN training. All right, well, I hope everybody has a great rest of their day, and we look forward to hearing from you all soon.